What's up, Ada Nation? Welcome to Dapp Central, your home for everything blockchain and crypto. I'm your host here, Fareed. As a part of today's video, we're taking a look at the macro markets, Bitcoin, and then doing a deep dive into the growing Cardano ecosystem. First things first, we've got Bitcoin hopefully getting to rally as a part of the final portion of the bull market. We've also got Crypto.com filing a lawsuit against the SEC, followed by SUI getting adoption for USDC, which has spurred an ongoing conversation about USDC being launched on Cardano. Following that, we've got general ecosystem updates. We've got news surrounding MELD officially hitting the mainnet, followed by updates coming in from World Mobile, Paima in the Midnight Network, as well as the Apex Fusion blockchain and a various amount of other Cardano-based projects. If it's your first time stopping by, my goal is to help you find your footing here within the growing Cardano ecosystem by providing you with the latest news, tutorials, and interviews. So if you appreciate content like that, make sure to smash that thumbs up on the way in. If you want more, consider subscribing. And last but not least, if you have any questions, comments, or concerns, leave those down below. Now, if you aren't aware, I'm a single stake pool operator operating the official Dapp Central stake pool, which is stake pool ticker DAPP. If you'd like to support, make sure to consider delegating with the Dapp Central stake pool. So jumping straight into the first bit of news here, we've got a crypto analyst who's now targeting 150K plus for a single Bitcoin at the top of the current market. So scrolling down here, he states that he predicts that Bitcoin could soon enter a parabolic uptrend buoyed by shifting investor investment and interest rate cuts. So I've mentioned this before. Typically, when we have monetary easing, that's when we see appreciation in price. If you take a look at the last time that we had monetary easing, that was around the same time that stimulus checks were going out, as around the same time that we had basically the entire globe shut down for a particular I don't want to say disease, but you guys know exactly what I'm talking, right? It's C19. So around that time was the last time that we had quantitative easing, and we saw Bitcoin basically going parabolic, taking all the altcoins along with it. Similarly, it looks like we're back at that particular stage with the very first rate cuts now finally happening. Gold breaking out into new all-time highs. The S&P 500 also breaking into new all-time highs, while Bitcoin continues to consolidate. So Bitcoin does appear to be lagging a little bit, but don't forget that when Bitcoin starts to move, it moves aggressively. So this analyst also mentions the fact that Bitcoin has been building a base for around the last 8 months at around the last all-time high. Now, what's interesting is if you take a look at the last time that we have had all-time highs in sort of the price action that we've seen after that, or after we're able to break past those, that's when you see Bitcoin going parabolic. So looking back at 2014, we set an all-time high. And then moving right over around 2017 is when that all-time high was tested again. Once we broke past that, we saw that parabolic run. That led into the new all-time high, or the next top, which was around 2018. And that wasn't challenged all the way until 2021. Again, back when we had global lockdowns and we had a lot of monetary easing or a lot of money printing taking place. That led us all the way into the $69,000 per Bitcoin face, followed by the steep sell-off back to around 16 to 17,000. And now we've, of course, rallied back up to around that $69,000 range, which hopefully will break. And once we do see that, that's when we're going to see that parabolic run. I'm definitely seeing what appears to be a cup and handle formation here, where if you want to measure the target move, you basically take the level right here, which is right about $70,000. You draw a straight line down to around the bottom of the range, which was around $16,000 to $17,000 per Bitcoin after the FTX collapse. And you take that value and you basically add that to the current price range, which would take us to around $125,000 to $130,000 per Bitcoin. Now, some people might think that that's a little bit conservative, but that's definitely what I'm going to be targeting and hopefully looking to take profits once we get to around that particular range. Moving over, we've got Crypto.com preemptively suing the SEC, given the fact that they were just served a whales notice, basically stating that they're also now selling securities. So we've seen the SEC go against Binance, Coinbase, Kraken, and now the latest exchange that they're now hunting down is Crypto.com. Now, again, Crypto.com has obviously been keeping up with everything else going on in the space, and they're going to be countersuing or basically challenging the SEC. So it states here, our decision to sue the SEC follows our receipt of a Wells notice from the commission staff, illustrating the fact that the SEC has basically been providing unjust regulation by enforcement, despite bipartisan indications that the next administration will take a much more constructive and effective approach towards advancing crypto in the US. Now, in closing, Specifically, with their lawsuit, they aim to contend the fact that the SEC has unilaterally expanded its jurisdiction beyond statutory limits, and separately, that the SEC has established an unlawful rule that trades in nearly all crypto assets are securities, and that basically doesn't look at how any of those assets are actually sold. And recently, the SEC came out and said that ADA, Solana, Matic, Polygon, and a few other networks or a few other assets were not deemed as security. So I'm not sure why they're picking their battles like this. Maybe it's just to sort of slow down the process, basically trying to stop the inevitable, which is the fact that crypto will be mass adopted. Now, what's interesting is that there's also an additional post that has just broken out, highlighting the fact that Bitcoin is growing exponentially faster than the adoption of the internet and mobile or smart devices. So taking a look at what we just saw there with Crypto.com being sued, and then the biggest fund manager, right, or one of the biggest fund managers in BlackRock stating the exact opposite, that like this is the future. So I want to play a brief snippet here, and then we'll keep things moving along, diving into SUI getting adoption for USDC.
But what we found with blockchain and digital assets is that in some ways, this is one of the fastest growing technologies we've seen in the last few years. On the right-hand side of the chart, you can see our adoption curve. This is just looking at how quickly certain assets are adopted by society. And you can see that blockchain and digital assets are being adopted faster than major revolutions before it, whether that's the internet or whether that's cell phones. And there's a couple of reasons for this. The first reason is just we're living in a more digital economy than ever before. If we're consuming things online, streaming videos, playing video games, buying digital content, it makes sense to have digitally native assets to conduct those transactions, particularly when there's, secondly, and importantly, in a year like this year, where over half the world's population is voting for new leadership, not just the elections in the United States, in Mexico, in India, and the European Union, we're seeing more geopolitical risk than before, and in fact, declining trust in institutions. Whether that's trust in government institutions for maintaining peace and order, whether that's trust in central banks in terms of keeping inflation under control, more distrust has exacerbated the need for a global monetary alternative. The third we're seeing is demographic changes, the rise of the millennial and Gen Z generation. Millennials, at least in the United States, are set to inherit trillions of dollars, are entering peak earnings years in their work, and are increasingly playing an important role in the economy. And millennials are very different from previous generations, because we, were the first generation to be digitally native.
So hopefully you guys get the point there. He breaks down, why we're seeing mass adoption of Bitcoin, but it boils down to a couple of different things, right? The internet and content is just more readily available. We're now shifting into a more decentralized and a more digital phase of just life. And on top of that, the brand new generations are sort of stepping away, taking a little bit more risk. And the fact that, they've grown up in a digital economy, in a digital age, they're more likely to adopt something like Bitcoin as opposed to some of the traditional investment vehicles. So again, this is massively bullish here, of course, as BlackRock continues to buy Bitcoin every single day, pumping up the price of the asset. Moving over, we've got updates coming in from the SUI ecosystem, which has now sort of sparked a debate within Cardano about the adoption of native USDC. So again, it states here, USDC is now on SUI. And I'll just pick up the pace a little bit here, but it highlights the fact that, this is now one of the fastest growing blockchains, and it's really popped up out of nowhere. I know there's been a couple of articles that sort of highlighted the fact that SUI was a thriving ecosystem. And since then, they've had a lot of increased user activity, and they've just released the fact that native USDC is now dropped on that particular chain. So there's a couple of articles here. Again, for the sake of time, I won't be able to read all of this, but it breaks down the fact that they'll be integrating or using CCTP, the cross-chain transfer protocol, and that now there's multiple DeFi and just DEX platforms on SUI, which are now capable or integrating native USDC. Now, shout out to Pareto General here from the MainSwap team, breaking down some of the differences and comparisons between SUI and Cardano, highlighting the fact that Cardano uses Ouroboros or proof of stake, whereas SUI uses Mysticeti, which is a DAG, and then it breaks down the different data structures, processing, smart contracting languages, and how things scale. And so I'm going to definitely be diving a little bit closer into this, but as a result of the fact that SUI has now gotten adoption for USDC, the Cardano community's asked, why doesn't Cardano now have native USDC? There's been talks about this for the last 3 years. And if it's me at this point, I'm just really believing that Circle doesn't want to deploy here. It's as simple as that. If there was enough incentive for them to do so, they would. The fact that, SUI uses the Move language, and that this is the first ever deployment on Move lets me know that Circle is willing to work with developers to get native integrations if they want to. Sui is just literally the latest, hottest blockchain that everybody's talking about. And we're now starting to see that USDC immediately shifted over there, right? So I don't think it's a technical issue. It's not a technical hurdle. Charles has mentioned it in prior interviews before that it's not necessarily a technical challenge. It's just a matter of getting negotiations to where both parties are happy, right? The Cardano ecosystem as well as USDC. Now, Charles has mentioned this is not his duty, or this is not an obligation that he has to deliver on. Again, with SIP number 694, this is where the power of the community comes in. This is where governance really finds its strength. If we as a community want USDC and we're willing to put up amounts from the treasury to do that, it's just a matter of getting a proposal on chain and getting the DREPs, SPOs, and everybody else to chip in and actually have their voice heard. So do keep that in mind. And also keep in mind that there's also a lot of other stablecoin initiatives coming down the pipes, with Charles mentioning the Wyoming stablecoin. He's also talked about JED, USDM, and USDA. So it's not like we don't have any stablecoins in the ecosystem. We do. It's just that we don't have any that are getting that much liquidity and that have, I guess, as much notoriety as USDC. So let me know what you think down below. At this point, I think it's very clear to me. It's not an issue with Cardano. I think it's more or less an issue with the amount that USDC or Circle is willing to accept in order to bring the native version of this asset to the ecosystem. Now with Sui, it's going to be really crazy to watch how it's actually adopted. Does this make a difference? It looks like user activity was already on the rise before the adoption of USDC, but let's see if people stick around given this brand new native integration. That's it there for macro news updates. If you guys appreciate what we've discussed so far and you want more content like this, make sure to smash that thumbs up. If it's your first time stopping by and you want more content like this, consider subscribing. And last but not least, if you have any questions, comments, or concerns, leave those down below. And again, if you want to take your support a step further, consider delegating with the official Dapp Central stake pool. Now, diving into Cardano-based updates here, shout out to Maro, who's just posted the fact that they've now signed the first legally enforceable contract on the Cardano ecosystem. Now, this is in full compliance with all of the laws and regulations within the Republic of Argentina. In terms of what this means, well, it means that thanks to this particular legal framework, they'll be able to actually carry out an enforcement action in court in the event that the smart contract obligations aren't taken into effect. And so this has been done for a loan between him and another Cardano community member, basically loaning Lucas, I believe it's 10,000 ADA. And of course, again, if Lucas doesn't pull up his end of the bargain, this will now be something that they can actually take legally to court. And so this framework not only applies to, personal or P2P loans, it looks like this will also be available or usable for a lot of other use cases. So it looks like he'll be sharing a little bit more with us here, but this is really what we want to see, right? Getting more integration, more adoption, and more regulatory clarity around the use of the Cardano ecosystem. Now, of course, Argentina has been a huge backer here of Cardano so far. And of course, Charles will be meeting with President Javier Milei. And then there's also the upcoming Cardano Constitution taking place in Argentina. So it's extremely bullish to see them now taking this a little bit more seriously. Moving over, we do also have the Blockchain Life Awards, which are now going on. And we've got Charles just letting the community know to go ahead and vote. If you missed this last year, this was really crazy. We saw a lot of people voting for multiple other blockchains. And at one point, there was even questioning about the legitimacy of the actual votes. So at this point, we've got Ton Network, which is now leading Cardano by, I want to say almost like a 5 or 6x, which is pretty crazy. Again, I'm not really sure how they're verifying a lot of these votes, but I know at one point they basically just turned off all of the vote counts and Cardano still ended up winning. But as of right now, it looks like Cardano is lagging behind, but keep in mind there's a total of 11 days left. So make sure to go ahead and have your voice heard. Moving over, we've got updates coming in from Meld. So for anybody that's been keeping up with this particular protocol here, bringing the entire banking stack to crypto, they are now live. They've just launched the launch of their mobile application or their Meld app, which allows for anybody to create a bank account and on-ramp in over 160 countries. And then on top of that, they've also now launched their lending and borrowing protocol. So this is really what everybody was waiting on for the longest time. And I know a lot of people gave Meld a really hard time because their development was slow. But when I take a look at what they're building, when I take a look at sort of how they've managed their entire process, I see a protocol that has not cut any corners. So here I am within my Meld app or within my Meld wallet. We now have the ability to supply and borrow. As it stands right now, I haven't actually taken advantage of the protocol just yet, but we can see that you're now able to borrow USDT, USDC, Bitcoin, AVAX, ADA, DAI, ETH, and Meld. Now, in terms of the risk rating model, right now they've sort of made sure that like this is super risk adverse just to make sure that, things are steady. But as the platform grows, as more liquidity comes in, they'll make sure to allow for people to borrow a little bit more and hopefully be able to earn a little bit more in terms of yield opportunities. So again, I'll provide more content around this, but just want to quickly highlight that there. In terms of, again, all of the supported assets, you can jump into their official documentation, but they support many assets located on ETH, Meld, Avalanche, and Cardano as well. We've got Ken highlighting the fact that if you're providing USDC on the Meld platform, right now you can earn around 60% APY. So again, with the fact that this platform is brand new, if you're providing liquidity, you're probably going to stand to earn the majority of a lot of the revenue or the profit, at least early on, until there's a lot more liquidity, therefore reducing a little bit of that yield. Moving over, on-ramping and off-ramping is currently available. If you are just jumping in with a free account, you're going to have to pay a 1% fee plus €1, depending on how much you're onboarding or on-ramping. And then if you sign up for Meld Premium, there's a 0.01 fee in addition to €1. So a lot cheaper, right? If you're going to be onboarding or on-ramping a little bit more. Now, in terms of the subscription, I want to say it's anywhere between $10 to $15 a month. But if you hold, I believe it's their Diamond Hand NFT, you'll now also be able to get that premium feature without actually having to pay. So a little bit of utility being built into that NFT. Now, if you want to find out more about Meld, the team will be sitting down for an ongoing Twitter space or an X space this coming Thursday, October 10th at 6 p.m. CET, where we'll hear from Ken, Pepe, and Moonguard, their product manager, about the official launch of the lending and borrowing, as well as the mobile application. Again, thank you for everybody who's been here with me along the journey when it comes to supporting Meld. I've received a lot of FUD, but hopefully all of those FUDers and people that didn't believe in the Meld vision are now able to see the fact that this team has been building and never neglected Cardano throughout the entire process. Next, we've got updates surrounding World Mobile. So we've got some breaking news about the fact that Batch 2, drop number 2, will be taking place on October 15th of 2024, and you can now join the whitelist at join.worldmobile.io. Now, what I love about this is the fact that the team has preemptively shared with us a list of all the different assets that will be available. So we have the total of 173 link nodes, which will now be able to be deployed all across California as well as Nevada. Jumping back here, those sell for about $750. We don't have any Portal 180s or Portal 360s. Those went out in the first batch, but we do have 4 Apex 90s. And so again, if you click on that, you can see what area they cover. And of course, the link nodes feed into the Apex nodes. And so that's sort of, or they sort of cover a wider range, which is why there's only 4 of them compared to the 173 link nodes. Now, scrolling down, we also have 2 Apex 180s, which cover even more ground. And then we're sold out when it comes to the Titan NFT. So make sure to jump onto this official website. The official WMT scan platform has now been shut down. This is where all the information is. And of course, again, make sure to check out that whitelist link if you want to go ahead and join early. Now, the team is back in Vegas for Mobile World Congress, one of the biggest conferences here for DePIN and telecommunications, where they'll be on the ground spreading the word about DePIN and everything that they've built and have to offer so far. So that said, moving over in terms of updates for Paima, we've got Sebastian Guillemot releasing the fact that rock, paper, scissors has now been implemented on Midnight using ZK proofs. So here in this particular screenshot, we've got player 1, which commits to either putting down rock, paper, or scissors. Similarly, at the bottom, we've got player 2 committing their hand, I guess, for lack of better terms. And then player 1 waits for reveal. Player number 2 waits for reveal. And then there's a winner that's been basically chosen depending on what player has chosen what hand to play. Now, in addition, Paima Studios, which is, I believe, also led by Sebastian, has put together a nice little brief video talking about the fact that they're now building a platform, or with the tools and the features that come with Midnight, they're now able to build dApps where Cardano wallets can now also directly engage or send assets to EVM-based wallets, for example, like wallets like MetaMask. So taking a look here, we've got the ability to send tokens in EVM wallet. We now have the Lace wallet, which will be used to send funds to that MetaMask wallet. They're now signing the transaction here. where they're interacting with ZK proofs or ZK proof smart contracts. There's now a local server generating the proof. And then we're going to see the actual transaction taking place and then the verification happening within the MetaMask wallet. So again, this just offers so much capability, so many opportunities, and a lot of interoperability for Cardano, which has historically been needed. And so that's really it there. Again, that's just the full process, but looking forward to seeing more of these different demos here as Midnight officially begins to roll out. If you missed it, they did release on the testnet not too long ago. So if you are a builder, you can now jump in there and begin to play with their playground or within their sandbox environment. Next, we've got updates surrounding Apex Fusion. They've definitely been building here on my radar. I plan on providing you guys more updates. I've spoken with their team and they've been making a lot of progress with the official launch of the mainnet, hopefully coming within the next couple of months. Now, here what we've got is the release of some of their governance platform and the ability to now go ahead and actually create your avatar. And as you interact with community members, as you refer people to Apex, and as you just operate on chain, you're going to be building reputation score. So this is basically a UI demo of the platform where they'll be keeping track of reputation. And of course, again, this is all still in its early stage, but just looking at it, it seems super slick, super simple. And for me, hopefully this is something that we can see applied to not just Apex, but just blockchain in general, right? The ability to see how a particular wallet has engaged or sort of interacted with the community, being able to give it a score, therefore making it a little bit easier to know when you can actually trust a particular address, obviously not knowing who's behind it and solely based off of on-chain transactions, referrals, and things of that nature. So I did want to quickly point that out there. Again, more content to follow about Apex, breaking down their stake pool operations, the fact that right now you can jump on the testnet, Prime is available, their reactor bridge is now built and functional, and there's now also direct capabilities to connect and interact with Nexus as well as a Vector. Now, moving over, I want to briefly talk about the F-Gold token, which has been released and updated by the Finest Investments team. So they've now made two big changes. And basically what this boils down to are some of the fees from the platform that people had complained about. And this is what you want to see, right? Projects that are receptive to feedback and that don't hold back when they're criticized. And so here they break down the fact that the community has voiced valid criticism and the team has listened. Now, that said, what they've done is basically provided fees when it comes to storage, low order volumes, and the fact that they have to keep the lights on. Now, because of those things, they've now basically gone back to the drawing board and made the following updates. In terms of physical redemption fee, so if you actually want to go ahead and actually hold your gold or redeem your gold from the custodian that's holding it, you now have a 1% amount, which will be charged based off of how much you're actually redeeming, as opposed to the old €9 per gram value that was a little bit more static. Similarly, in terms of the initial sale, so when you're buying it, there's no longer a €9 per gram fee. Instead, you're now going to be charged 1% of the sale price. So what does this actually mean for the end users who are purchasing F-Gold from the Finest platform? Well, if you would have purchased before this update 1 gram of gold, that would have cost you $93.44. However, after the fee updates, that'll now cost you $84.44. Now, jumping over to actually compare this to the current price of 1 gram of gold, we now have that particular value at around $84.32. So you're paying basically market price. Now, of course, there still needs to be a little bit of fees for Finest to keep the lights on and for them to, pay and reward the custodians. But this is what you want to see. Again, teams being receptive to the fact that community has provided feedback. And this shows that, this is a good faith move to make sure that their customers and end users are pleased, because at the end of the day, without the end users, there is no Finest Investments. Moving over, we've got updates coming in from the official Indigo platform, where they've now released the version 2.1 of Indigo, stating CDPs or collateralized debt positions, staking positions, the new DAO Treasury portfolio page, and the first iteration of algorithmic interest are now live and ready to be used. So the biggest thing here is the fact that moving forward, a lot of the interest rates associated with CDPs, the DAO Treasury, etc., will now be shifting dynamically depending on the health of the protocol. So this is an extremely long breakdown here. This went through the entire DAO proposal process with an overwhelming majority of the community voting yes to deploy this upgrade. but it breaks down here the introduction of their algorithmic interest rates. And it states here that in order to enhance peg stability, which this platform has had a little bit of issue with, specifically with IUSD, which is supposed to be pegged to a dollar, without over reliance on redemptions or market conditions, the team has proposed an algorithmic interest rate mechanism that adjusts over time based on the protocol's collateralization health. Some of the key objectives with this brand new proposal, which of course is now live, include the ability to better improve their balancing of incentives, as well as the ability to improve their peg stability, and then the ability to maintain the protocol's sovereignty. Now, that said, again, they've got calculations here breaking down everything. This is extremely technical. I don't have the time to highlight all of this now, but they've also now basically, again, shifted this model to incentivize discounts to repeg assets anytime that there is a depeg in their ecosystem for any of their I assets. So it states here, for further peg stability, we propose a discount mechanism on the interest rate based on the proportion of redeemable I assets. Again, it breaks down some of the benefits here to encourage peg recovery, to incentivize position management, and to also, again, apply that dynamic stability. Again, we've got more of the math here and more of the breakdown for the different I assets, showing some of the different values and some of the different sort of adjustments that happen over time. And then in conclusion, it states that by introducing an algorithmic interest rate mechanism as a part of protocol version v2.1, this is basically them taking a proactive measure to enhance peg stability while maintaining the protocol's usability and independence. By dynamically adjusting interest rates based on the system's health and incentivizing users through discounts, the protocol can better manage the balance between leveraged traders and spot holders using Indigo's I assets. Last but definitely not least, we have the official launch of Rocket taking place here. And so the official link to this platform, I believe, is rocket.store, which we have here. And you can now quickly launch any asset on Cardano with little to no risk. If the particular assets you launch meet the bonding curve, you're able to earn perpetual rewards moving forward. But if they don't, you're actually given a refund, which is a little bit different than Snek.pump or Snek.fun, which launched about a month ago. So as it stands right now, we can see all the new tokens here in this left-hand column, tokens that are now about to take off, and then tokens that have officially met the bonding curve and are officially trading. Now, this is really interesting because, again, a lot of people were sort of rushing into meme coins here in Cardano. And I want to just take more time to better understand the meme culture here in the ecosystem. Now, that all aside, I want to give a shout out here to Travis Bailey, the entire team from JPEG.store for their diligent work, bringing a brand new offering to the Cardano ecosystem. Again, check out the official platform, which is available at rocket.store. Get familiar with it. And if you just want to jump in here and trade some of these tokens, it's relatively simple. You can connect your wallet here. You've got the charts right in the middle. You can see the different holders, the transactions that have come in, and you can see all of the volume there on the right-hand side. And then they've got additional information at the very bottom of the page. That will do it here for today's Cardano Scoop update. I hope you guys found this to be informational. If you did, please make sure to smash that thumbs up. If it's your first time stopping by and you want more content like this, consider subscribing. And last but not least, if you have any questions, comments, or concerns, leave those down below. That said, and as always, I'll see you guys in the next video.